right, welcome everybody to another edition of our ongoing series, Community Capital Live. I'm really grateful for all of you that are listening in and joining us here today. I know there are all kinds of options of where you could be spending your time, what you could be, listening to or watching out there. And so the time that you spend with us, we are grateful for it and we take it seriously. And I'm excited because today we're going to get to talk to Annie Forrest from the REDF Appalachian Growth Fund, which is my understanding, it's a mission-driven initiative focused on scaling up social enterprises across Appalachia, helping things like job creation, working around other social issues that need to be tackled, blending impact capital with, place-based economic development. So I'm really excited to get to dig in there, especially Annie is here local to us, to where I am and Kevin are at. And we'll get to talk a little Appalachia as well. But first, I do want to give a shout out to our partner organizations, everyone that's involved, and our normal participants and panel here. So this really is a collaboration between a few different groups that are all trying to do the same kind of work here. So the first that I want to mention is the Main Street Journal. That is the place to go to learn about how to invest locally. It's where I first learned about it was from books by Michael Schuman, who runs the Main Street Journal. And if that's really the place, if you want to look at place-based investing, that's the go-to for that. So Main Street Journal, go check it out, subscribe to their newsletter, and get involved. Also, I want to shout out Neighborhood Economics. They are a organization that is a nonprofit that convenes people in the impact investing, local investing, social entrepreneurship spaces all together to learn from each other, to create the connections we all need. Had a good conference in Asheville here a few months ago and are looking forward to the next one coming up in Chicago. So go to neighborhoodeconomics.org to check out where you can get involved there. Also, Impact Alpha has now started publishing this on their podcast page. Impact Alpha is really the place to go for impact-based investing. So not so much around a specific place, but around a specific type of impact investing. Really, really thorough reporting. Dennis and the rest of the team there do an awesome job. So go check them out and listen to the other shows that they have there as well. And then lastly, the Mindful Marketplace show, which is my show that was on bizradio.us up until Helene. But you can go listen to the back episodes that were about worker ownership, about social enterprise, and about community and impact investing as well. So, yeah, let's go ahead and get into it. I know we've got our panel. Just so you guys know, our normal contributors on our panel here. We're a little short staffed today, but that's okay because it just means Annie, you get to talk more, or I get to ask the questions they normally would. So either way is fine. But normally we're looking at Michael Schuman from the Main Street Journal and author of, Put Your Money Where Your Life Is and several other great books. Kevin Jones, who's the co-founder of Neighborhood Economics that I mentioned. And we also have had joining us Nicole. Jen, I'm sorry, I'm gonna forget her. I'm forgetting her last name. It's
But
in
it's Vitello.
yes, Nicole Vitello.
Oh,
Yes, from
and
Equal
she's
Exchange.
in the waiting room as we speak.
Oh, there we go. Perfect timing. Man, I manifested her out of the ether. So glad to have you, Nicole, who's been joining us from Equal Exchange. Really, really great to have her insights and her questions in here. So we'll go ahead and get to know Annie, get to know the Appalachian Growth Fund. And as we're going, go ahead and put any questions you have in the chat because we will have a time at the end for our for Q&A from the audience where you get to ask the questions that are burning for you. So Annie, thank you so much for joining us. If you can unmute and yeah, tell us a little about what is REDF, I guess, and what was the purpose behind initially the problem you guys were trying to solve with the Appalachian Growth Fund.
Sure. And it might be a little bit of a winding road to actually get to the Appalachian Growth Fund portion of it because we are almost like we are a startup fund within organizations that have been around for a long time and who have been working around the field of social enterprise and employment for the past several decades. But Thank you all, first of all, so much for having me. I was on a panel moderated by Michael at the Neighborhood Economics Conference back in April here in Asheville, and it was such a great opportunity to meet him and learn more about his work and community investing, place-based impact investing work. And so I'm excited to meet more folks on this call as well. So, REDF as an organization started out about 30 years ago, primarily as a venture philanthropy, grant making organization, and pairing that with a lot of very deep technical assistance and capacity building support, specifically for social enterprises that are employing folks with different types of barriers. So, people coming out of the justice system, folks who have had unstable housing or experienced homelessness, people who are in recovery or have had mental health challenges, opportunity youth, kind of 18 to 24 age range, who may not have a pathway to employment after graduation from high school if they have graduated, and more recently, refugees, asylees, trafficking, and domestic violence survivors. So those are kind of our core focus populations. But really, we're looking at the quality of the jobs that are being created or retained, kind of across the board for the businesses that we're working with, both nonprofit, for-profit, co-op, hybrid, kind of business structure, doesn't matter. So out of the work that REDF has been doing nationwide for a long time, we built out the REDF Impact Investing Fund, which is a nonprofit certified CDFI, to be able to provide other forms of capital to these organizations and kind of build their credit worthiness, especially for entrepreneurs who have lived experience in, one of the populations that I mentioned earlier, being able to help them tell their story and build up their credit worthiness so that they have access to capital. So the REDF Impact Investing Fund has been around for about 6 years, and now the Appalachian Growth Fund is a new place-based initiative that is formed out of the REDF Impact Investing Fund, or REEF. So we have been building it out for the last year and a half or so, but we are officially, ready to go with dollars as of February of this year. And the Appalachian Growth Fund is really focused on anywhere within the Appalachian Regional Commission's footprint, from northern Mississippi all the way up to western New York, but with special emphasis on central Appalachia, which is where Joel and I are sitting right now. So parts of the 6 states that make up the central portion of this region, where the gaps of capital are the largest, the most rural parts of our region, and where our goal is to help small businesses who have been around for a couple years but who are in need of some growth capital be able to hire more folks, retain more jobs in Appalachia. We know that the silver tsunami is happening here, and we want to keep a lot of those small businesses that are the backbone of our region, be able to keep them here, and also help these companies as we work with them improve the quality of the jobs for the folks that they're employing. So I'll pause there, but that's
Yeah.
how we got here.
Well, and when I'm thinking about those, the population you're talking about who has those lived experiences entering
Mhm.
facing barriers in the workforce, I guess why Appalachia? What unique assets or challenges made this the right region for REDF's first place-based fund?
Yeah, it's a great question. We are moving into our next strategic period as an organization from 2026 to 2030. And part of that is really going deep on place-based work in several different parts of the country. So there are places like LA where we've been doing some of this work for a little while, where we want to go even deeper. But because REDF's work has primarily been urban, we want to make sure that we're also working in rural places. I mean, people need quality jobs everywhere. And Appalachia, especially as we're kind of going through an energy transition here, an economic transition, there's a real opportunity to focus on different types of upskilling or reskilling, and working with businesses here to ensure that the quality jobs are created and kept here. So part of it is that. making sure that we are also working in rural spaces. Part of it is that we had done some grant making throughout the region to key partners like Coalfield Development in West Virginia. That's just doing, I don't know if anyone is familiar with their work, but they're just doing amazing work and have several different employment social enterprises as part of their overall business. And so, it was in concert with them thinking about what some of the capital needs are that they and others in the region have. And I would say it's also in partnership with some of our investors. The Ford Foundation is kind of our anchor investor in this fund, and they have a history of doing work in the Appalachian region. And we had been thinking through different ways that we could collaborate, and this felt like a really solid way that they can continue their work in the region with a partner that is focused on, again, that job creation and retention piece. All of that coming together built out the Appalachian Growth Fund.
Yeah. I also noticed, and I saw that you guys focus on what you're calling employment social enterprises, or what's known as that. So for people who
Yeah,
aren't familiar with that, what makes them different from other, just job creating businesses?
sure. So for us, whether you're a nonprofit organization or a for-profit, there has to be some type of revenue generation, an actual good or service that is being produced. So that's kind of the enterprise part. And then the employment and social piece is around providing pathways to employment for folks with the barriers that I mentioned earlier. So very intentionally hiring from those populations, and then also creating quality jobs. So um, I can get into kind of more detail about that, but I would say those are the two biggest things. Need to be revenue generating, have some
Hmm.
kind of good or service, need to be employing people from within our focus populations. But for the Appalachian Growth Fund, we're actually expanding the aperture a little bit and saying if you're a small business that just by nature of where you're employing folks in Appalachia, you're naturally hiring people who are in recovery because we know the opioid crisis has
Yeah.
done a lot to our region, and there's a lot of work happening around the recovery system. I talked to a business recently that said 18% of our workforce is actually people in recovery. We've never intentionally created a hiring pathway for those individuals. We haven't thought about the things that might make it a better environment for them, but we're really interested in doing that. And we know that this is kind of a population that we're naturally serving because of the jobs that we're creating. So, in partnering with us through the Appalachian Growth Fund, we can help not only on the access to capital side and providing more flexible patient dollars for them, but also on thinking through what's going to make it a really good environment for someone who is in recovery and how can you kind of ratchet up the quality
Mhm.
of the job, create wealth for those employees. And we have a whole line of work around economic power um, and specific metrics that we're asking these businesses to take a survey about so we can actually track the quality of jobs over the life of a loan or investment with us.
Yeah. Um, and Nicole, feel free to just start jumping in here whenever. I'm going to keep asking questions, but just
Yeah.
please jump in at
Great.
any
I've got a
moment.
question. Just put me in the
Go.
queue and you go
Yeah.
ahead and I'll
Well,
jump
all
in
I was going to
when.
ask is, are these loans that the businesses are getting? Are they? How does that? What does that
Yes.
structure look like? Yeah.
Yeah, I was
Yes.
going to ask Sam about the fund. Like, how big is the
Yeah.
fund? How is
Yeah.
it distributed? How did you start? Like, I think that's helpful
Yes.
for some people in this series.
You got it. So the fund can go up to $25 million. We're currently at about 8.5 with a mix of different types of investors, and happy to go into more detail about how we structured that within the fund to be able to have institutional investors for Community Reinvestment Act credit, have foundations providing program related investments as one of the classes, and then lastly having a philanthropic layer that operates kind of like a loan loss reserve to some extent, but is providing kind of that extra cushion within the fund to make sure that we're able to take on what I think outside folks would call quote unquote risk. So we're at 8.5 million right now, and we left the fund really flexible in terms of the type of of the type of lending or investments that we can make. So we use the Appalachian Regional Commission's 2024 report on access to credit and capital, which is a really robust report that a lot of CDFIs and impact investors in the region spoke into. Next Street was the organization that put that all together and kind of did their external research. And it talks a lot about what some of the gaps in access to capital are in our region. So things like loans within the 100 to 250,000 mark, $800,000 and up. There's a gap in microfinance. There's an opportunity to do revenue-based finance. And so we kind of baked all of that into the fund and said, we'll leave it very flexible so that we can meet the needs of these businesses wherever they are. So yes, some of it is more traditional term loans that we've been doing already through the CDFI that can be longer, 5 to 7 years, more patient. And that actually, as we're doing diligence, takes into account the lived experience of some of these folks, and make sure that that's highlighted as an asset. And then we have put a lot of structure around research into revenue-based finance to be able to do revenue shares with organizations. That's also more equity-like, but very, very friendly for borrowers and doesn't actually take any ownership from them. We can technically make equity investments out of this fund, so we have that flexibility.
Yeah.
And then we left a carve out for microfinance as well to do in collaboration with whether it's another CDFI or organization locally that's already doing that work and might just need a little additional capital to continue doing microloans 50,000 and under. That's not our area of expertise, but we saw that was a gap and wanted to make sure that the fund could also help fill that.
And Annie, could you give any examples of people maybe in, even a couple of those brackets between the microfinance, the term loans, the revenue-based finance, and the equity? Like, are any coming to mind that, might be a good example?
A good example of
who you lent to, what type of organization, just to kind of make
sure.
the jargon into real experience. I think it's helpful also for folks that are maybe either listening now or will be.
Yes. And I will say, we're really at the beginning of this journey of actually getting dollars out the door. So I'm hopeful that in the next couple months, we'll have even more examples. But for instance, just made a term loan to a solar company in the region to help expand the residential work that they're doing. They get some of their employees from a workforce development program for solar installation through a partner organization that we've funded on the grant side. So we know that those are it's good workforce training. It's people who are coming out of incarceration and who have had unstable housing, and they're getting really quality jobs at this solar installer. So that was set up more like a traditional term loan, interest only period. It was an employee acquisition as well, so creating wealth for the employee. We're really excited about being able to do more of that, and also potentially help businesses convert into co-ops. But I think this employee ownership angle is an exciting opportunity in Appalachia, given kind of the turning tide of people retiring.
Mm-hmm.
And how can we make sure that wealth remains here and is passed down to employees?
Yeah. Have you guys connected at all with Industrial Commons?
Yes.
Okay.
Yes.
Awesome.
Our former CEO is on their advisory council, and so we're connected that way. But I was just over at their groundbreaking last week for the innovation campus, and I didn't mention, but one of the things we also baked into the fund is the opportunity to do new market tax credit deals, because they have such good, they're tracking jobs very closely and also having a lot of community impact. So I'm hopeful that as the innovation campus or other new markets opportunities come online, we can also be part of those.
Yeah, absolutely. Even just in the education part with new businesses,
Yeah.
Like where there's a lot of talk about people's purpose when they're starting their business, even in social enterprise.
Hmm.
But having these businesses learn that the exit strategy, can really align with that purpose
Yeah.
if they structure it properly, I think is an important piece of that conversation for
Yes.
sure. Nicole,
That's
what else is on your brain at the moment?
Great question. I guess in terms of the $25 million goal and the 8.5 that you are now, like how long has that taken to raise those funds? How comfortable are you feeling about the $25 million? Does that feel like a good achievable goal or like a
yeah.
daunting, goal? Like how,
Yeah.
I think obviously sometimes when you're starting these things, you're like,
Hmm.
you need a number. And then as you're working your way through, yeah, that number, the perception of that changes. So how do you
Right.
feel about that?
That's a great question. And I will say I'm not as close on the fundraising side as others on our team. So I would give my response with a smaller grain of salt, because they might be feeling a lot differently. I will say I think it's just a tough fundraising environment broadly right now. And I think everyone is kind of feeling constraints to some extent. We are very grateful to have the 8.5 million and to kind of be doing a lot of active outreach to continue raising. And I know that it will take time. But if we're able to get to 15 million, that would be great too. I think any additional dollars that we can bring into the region, we hope will be additive and can go far, whether we ultimately reach that $25 million mark or not.
And I guess the follow-up question to that then is like how, you're speaking about dispersing the funds too, right? So it's this dynamic
Mm-hmm.
situation where as
Right.
you're dispersing the funds, the word will get out more,
Right.
hopefully, right, about what you're
Exactly.
doing, and there'll be some word of mouth, which is a
Yes.
great way to convince, to expose the idea to people who may, have had different experiences with financing or credit or traditional
Mm-hmm.
lending, which I know can be really hard for some
Mm-hmm.
businesses, right? So there's that. So there's this whole arm that's like, hey, we're doing this
Oh,
thing. Here are these funds. And
yeah.
then there's this whole arm being like, we're raising funds, and there's a
Yes.
dynamic relationship between the two. So yeah, how has that interplay been as you're thinking about other people to be lending to and the money coming in? Yeah, anything from your experience that could sort of shed some light on that.
Yeah, I would say having those examples is so critical to be able to take to potential funders, investors, and say, this is how we're actually using these dollars in the field.
Mhm. Yeah, because they all want to see like impact, right? They're like, show us your
Impact.
impact. And you're like, well, we don't have a lot
Like,
of
we're just
impact yet. We're just start. Yeah, I hear
I
you.
know, exactly. I think it does. I think what does help in our case is that we have the broader CDFI where, we do have 6 years of lending that's already happened. Some of that has been in the Appalachian region, not to the extent that obviously we this fund will be able to do, but it is nice to have that track record as well, and be able to show, 70% of our borrowers are folks of color. 58% are people with lived experience. So we are like, really being intentional with how we're deploying these funds and have good examples of businesses already. So yeah, building that up in Appalachia to help tell the story here, and excited to have, the solar company, for instance, to help start that story.
Yeah, that's a great business to start with. It's a little
Yeah.
more stable. Yeah, great.
Yeah.
I did have a question. So is most of the funding then right now from the Ford Foundation? Is it a collaborative situation? And one thing we always talk about here, especially from, Michael usually will bring up from the Main Street Journal perspective of, as far as allowing the local people of Asheville to actually
Yeah.
participate in the fund, non-accredited, like where do things
Yeah.
currently sit, and how would you like to, or how could they, move forward there?
Yeah. So the Ford Foundation definitely anchor investor and has helped us create this whole entity. Have other institutional investors making up that 8.5 million. And I think we will kind of see where that lands at the end. But I imagine that I would love for a day to come where we're able to open it up to all kind of investors. I don't know if we're there at this point. It is a closed fund for accredited investors right now.
Mhm.
Hopefully in future funds, we might be able to open it up too. But I am really excited about some of the work Mountain BizWorks does, for instance, around their community notes and kind of have that personal connection. But um, yeah, for this fund, we haven't opened it up to community investors.
Yeah. Yeah, it can be a complicated thing to do. We had on Matt Raker
Yeah,
two episodes ago.
good.
Yeah, he's a good friend
That's
for a
awesome.
long time now. Yeah. So
Hmm.
the other thing I was curious about with Appalachia and with the funding is, I know there's definitely a mindset that Appalachia can sometimes be used like when the Appalachia and outside money intersect with each other.
Yeah,
That there's definitely a view that the outside money comes in, it promises a lot of things, but it ends up
yeah,
kind of doing what it does in the coal industry or this kind of thing.
yeah,
Do you guys, how does REDF guard against that
yeah,
in its own work? Yeah.
yeah. I mean, I am so personally aware of that dynamic as an eighth generation Appalachian and someone who cares so deeply about this region. And and from the first day that I was working with just the inklings of read up on the inklings of this fund, that was
Mhm.
something that was very important to ensure that we are committed for the long haul, and that it doesn't end up feeling like bringing in outside money and having that same type of narrative play out. So one, just like very aware of that personally. And I think
Mhm.
being able to have a lot of really solid partnerships from the start with other CDFIs and organizations in the region helps to mitigate some of it. One of the very first things we did was join the Appalachia Funders Network so that we're really in concert with people that have been doing this work for a very long time in the region. Matt was one of the first people that I reached out to say, like, where are you seeing gaps? How can this be additive? How can this support the work that Mountain BizWorks is already and other folks are already doing? Um, and I would say, Red F as an organization is so committed to, I think has such a good track record of kind of doing what they say they're going to do that I felt comfortable. But we will, yeah, we'll see how everything continues growing over the next 10 years. We know that we're certainly in it for that long and hopefully I would say much, much longer.
Yeah.
Yeah.
Yeah, that's awesome.
Yeah.
I know we had one come from the audience here that was also about investors in general, so I'll go ahead and just throw it in. John, I hope it's okay if I just ask your question. John Niederman asked, do you have private investors? And if so, what are their return demands that you're kind of experiencing when you talk to them?
Yeah. And John, do you mean individual private investors? Or are you talking about more institutional?
I'm meaning individual private investors that you said accredited investors in your
Sure.
description. So I'm
Uh-huh.
curious about what their expectations are for their return.
Yeah. We have an overall, and I want to make sure that from our team side, it's okay to share some of this information. Happy to follow up more with you, John, too. But yeah, we do have a kind of overall hurdle rate for the fund. And so that would be consistent across any type in any of our class A or B investors, which could include individuals. And then we have the philanthropic layer, which um, is set up as 0% return, but could be, should the fund do really well, some of that capital would be returned, but not with additional interest on it. So happy to share more with you offline. I just want to make sure from our team that
Mhm.
that's okay.
Yeah.
I'll be at a conference with you next week, so maybe we can talk.
Awesome. Yeah, that sounds good. Yes,
Awesome.
the
Tiffany,
green bank. Oh my
yeah,
goodness.
Tiffany, if you want to unmute and join the conversation here, I've been, please do so.
Yeah, thanks for being on, Annie, and I love the
Yeah.
work that you guys are doing. Yeah, I just recently realized that the $500 or $500 million EPA funding was put on pause for the Green Bank of Rural America, and I know you work in
Yeah.
cohorts with
Yeah.
those groups. So I'm curious to know. I feel like there's so many things changing in when it
Yeah.
comes to government funding, but that seemed like it was really going to fill a large gap and bring in a lot of green energy jobs. So I'm wondering, what kind of
Yeah.
strategies are happening? I'm sure there's a lot of talk happening about what do we do now? Where do we go? What are the next steps? And curious,
Yeah.
yeah, what you're seeing.
And I think some of that is ongoing too. I mean, Impact Alpha did a great webinar that I joined last week that had a lot of the Greenhouse Gas Reduction Fund recipients speaking to how everything is in limbo right now. And yeah, separately, another hat I was wearing was with the Green Bank for Rural America on their Rapid Start team, helping to start to try to get some of those dollars out the door before everything was paused mid-March. And so, we know the organizations that had applied for those dollars in Appalachia had really robust pipelines that were ready to go. So from our perspective, at the Appalachian Growth Fund, how can we still help to fulfill some of those um, requests or community needs with dollars that aren't tied to the EPA or to these funds? Is still, we don't have $500 million, but hopefully we can still, do some work to help move that forward, and then also, closely monitor what's happening within the court system so that we're ready to go if and when the dollars are released. I mean, part of our original thesis for the Appalachian Growth Fund was that all of these dollars were coming into the region through GGRF. And there are likely folks within the supply chains who are never going to be able to take on, a major contract for an affordable housing development, but who are making really quality construction jobs. And how can we help fund them to be able to subcontract out and still grow and provide more jobs for folks? And we'll see how it all shakes out. I hope those dollars come back online.
Thanks, Tiffany. I appreciate that. I guess when I'm thinking about like more long term for y'all, what does success look like beyond just, individual enterprises? What is how would the fund contribute, I guess, to a stronger regional ecosystem?
Yeah. I think part of it is actually creating an ecosystem of employment social enterprises. We know that there are really stellar examples that already exist here, but being able to contribute to that even more, help more grow, help more businesses that are interested in employing folks from these populations be able to do so sustainably. So we have also submitted for a lot of additional grant dollars on the REDF side to be able to support early stage businesses. We have an accelerator program, so helping like create an entire pipeline of these groups to grow from an accelerator to a 3-year growth portfolio to actually taking on some of the capital from the Appalachian Growth Fund. So I'd say all of that. We have a second initiative called the Appalachian Emerging Investors Fund that is still being figured out a little bit, but is focused on providing opportunities for students at Appalachian colleges and universities to get experience on the investment side with more early stage businesses, especially the ones that are being incubated within those colleges and universities themselves, to hopefully stay in the region and be able to, see themselves in jobs here and have opportunities here, or if they're an entrepreneur, kind of understand how it works from the investment side of things. So yeah, we're trying to come at the ecosystem from multiple ways, but I would say ultimately focus on being able to create and retain quality jobs
Yeah.
in our
No, I
region.
mean, that's huge. That's huge here, especially. And I mean, I know it is in the region, but you know,
Yeah.
we're in a town that, you know, has hotel jobs and waiting tables jobs, and
Yeah,
that's most of it. So,
right.
yeah, no. How do you guys define impact in this context?
Yeah.
I'm curious, is it how is it that it's built into the structure that it's helping the folks that have the lived experiences, and it's not just maybe like a byproduct? Because as you said, like there might just be people like that sort of anyway. Is there a way that that's really kind of built into how the fund operates, or what kind of
Yeah.
businesses it invests in?
Yeah. I mean on the I'll talk to the job quality piece in particular.
Hmm.
Our team's done a lot of work around what it means to create economic power or have dignified work. And so we actually have a set of 7 different categories that we're looking at, each one with different impact metrics to say if you're, it's not enough to just create a service industry job. These are the things you should actually be thinking about. And so we have our borrowers complete that at baseline and then over time work with them through technical assistance support to be able to make changes to bump up the quality. And interestingly enough, in California, we have a specific fund that is called the Growth and Mobility Fund, and it actually ties your interest rate to the quality of the jobs that you're providing. And over the course of the life of the loan, as you're bumping up the job quality, then your interest rate is actually going down. So you can see the direct kind of financial incentive for doing these things that may actually have a very low cost. And so we're using that same type of survey tool and building technical assistance around it so that we can have like very specific ways to track the impact on jobs.
Yeah. We did have another question coming in from Eileen, and that's to, I guess, Eileen, are you asking more generally the difference, but what makes someone an accredited investor, or is it more about what makes them accredited for this particular fund? If it's just accreditation, it's essentially having what is it? It's a net worth of 250,000 or more makes someone an accredited investor. But if it was more
Yeah,
specific,
I just put a link in there, Joel. I wasn't sure
okay,
also for Eileen, but I just put a link to the SEC
yeah,
Awesome.
definition. So
great.
yeah, it's
Yeah.
both of those.
That way I don't have to mess it up and
I was going to say
say
the
it wrong
SEC
and like,
knows. I
yeah,
don't.
like
Yeah, it's the financial criteria is net worth over 1 million, excluding your primary residence, and income over
income over 250.
200,000 as an individual or 300,000 with a spouse and partner, each of the prior 2 years.
Yeah. So you got to have paper
Thank
to
you.
make more
I'm
paper.
new
That's
to
right.
all this, so.
Oh yeah, yeah. No, thanks
Yeah.
for the question. It's good because
Great question.
we didn't mention it.
Yeah, I mean, exactly. Those of us that are in it, I'm like, is it 250? Is it 200? So no, always a good reminder,
No.
Eileen. Thanks for the question.
Great reminder.
Um, so I guess if we fast forward, 10, 15, and I actually don't know if I caught earlier, how long has the fund been? When did it first kind of take shape, and how long have you guys been in operation now? I don't know if I actually got that.
Yeah, we had a first close in mid to late February. So
Okay.
very new in
Brand new.
terms of,
Okay.
yeah, brand new, brand new. So a lot of this is, and I really should have reiterated this up front, is evolving
Mhm.
as we are building more partnerships in the region, talking to more people, really seeing where some of the gaps that we can help with are. Um, but before that, we had been kind of building up to that close for about a year from, I would say, maybe a little bit longer.
Yeah.
But it definitely took a lot of time to get the legal entity in place, make sure that everything is squared away. I mean, just the amount of time you gotta spend with lawyers to get something like this off the ground certainly takes time. But a lot of that was also spent talking to folks in the region to see how this can be the most impactful and additive to their work.
Yeah. So if we're fast forwarding then 10, 15 years, what's your, bold hope for the role of these employment social enterprises, and what
Yeah.
they could do in reshaping, our regional economy?
Yeah. I mean, I certainly hope that there is a robust ecosystem of these types of social enterprises that are really actively employing folks from the populations I mentioned and have very specific pathways to create wealth and economic power for them and for their families. And that employment social enterprise is kind of seen as a really important part of the business ecosystem, and that other businesses, whether they consider themselves that or not, have adopted these quality job practices. So whether or not you're hiring people coming out of incarceration, you are still thinking about what it actually means to create wealth for your employees. And I also hope that we're able to retain a lot of jobs in the region so that as people are retiring, don't have to sell to someone outside or have that business just go away. We can figure out
Mhm.
ways to create more pathways for employees as well.
Yeah. Yeah. I love that you mentioned you guys are already talking with, Industrial Commons and what they're learning about the
Yeah,
transitions that
absolutely.
they're making, because they're right here in the backyard and they're one of the
Co-ops.
largest. Yeah, exactly. So,
Mhm.
if there's a path to that from entrepreneurship, individual ownership to,
Yes.
employee ownership, that seems
Hmm.
to be like a really wonderful opportunity.
Agreed.
Yeah.
Agreed.
Annie, I guess on that note, how do you network with other, I feel like part of this, the goal of these sessions, right, is to, so that everybody is not recreating the wheel in every area that they're in. Like you
Yeah.
mentioned, the legal hurdles, the other hurdle, like,
Mm.
was there anybody that mentored you through this process, or that you as an organization looked to for advice and support, and or did you imagine yourself being, your organization being that for others? How do we keep
Yes.
making these connections around community capital? Because it
Yeah.
does feel like we all feel like we're all so different, but in the end of the day, we're still dealing with municipal, like you're dealing with the city,
Yeah.
a state, other people that are
Hmm.
looking for employment initiatives. Like, how do we keep linking these efforts so they feel less lonely or isolated?
Yes. Agreed. I will say, as we were building out everything, the folks at Ford were able to connect us to some other funds to talk through some of the startup um, information that we would need to learn, and we were able to write some of that down. And even within the last couple months, had an organization based here in Appalachia that is looking to build out not a similar fund to this for I would say an intersecting area. And we were able to quickly say, like, here's an example term sheet, here's an example budget, here are some quick docs to help you set up what you're trying to do, because we found that it was hard sometimes to get all the information that we needed, and it does feel like it can feel, yeah, just like an up, not battle's not the right word.
No, it's a
It
daunting,
just
it's a
feel really
daunting
challenging.
process.
Yeah, and
Yeah,
daunting,
yeah, yeah.
especially if you've never set something, like this fund within this fund structure up before. And so we're excited to be able to try to support others who are doing that too.
Yeah, and that's another space where I think community capital can be important. It's like for a bunch of, as we were talking about accredited investors, there's also a huge segment of the population that's just been excluded from any type of investment, both education, experience, and otherwise. And so, like having some of these diversified funds
Yeah.
where both people are receiving loans
Right.
and also able to invest in their community, it's a really important aspect of this. So even if your fund might not be set up that way currently, the fact that you're using your resources to help others who might be doing that is another way to think about that. So that's great.
Absolutely. Anywhere we can lower that barrier, partner with other folks to share. Absolutely.
Man, I learned a lot. I am excited for, kind of seeing how this grows and what impact you guys are going to start making, little by little, and then more and more as things develop. Um, remember that we're doing this pretty much every other week right now, unless we have a cancellation or we need to reschedule. So if you enjoyed this, please share it with the people that you know who would. I don't remember who it was that came on here and said this is the best kept secret. Let's change that. Let's make it not such a good secret. And get registered for the next one. Jen, do you have it on the? I don't have it in front of me. Who do we have coming up next time?
Yeah, absolutely. We have Linda Best of FarmWorks. She will be joining us on July 16th at 2 o'clock. And then we follow up with David Kenny of Project Equity. But I will be sending emails to everybody who's registered and making it easy for you to come to the next event.
Excellent. I'm looking forward to those. I got to talk to Allison from Equal Exchange last year. I had a great conversation with her. Yeah, that'll definitely tune into both of those. And in the middle of your summer, make sure to take a little siesta at 2 o'clock in the afternoon when it's too hot to do anything else, and come in and hang out with us. Thank you again to Nicole from Equal Exchange for joining us on our panel and filling in and joining us today. Thank you so much to Annie from the Appalachian Growth Fund. Thanks to Impact Alpha, Neighborhood Economics, Mindful Marketplace Show, and of course Main Street Journal. Main Street Journal is going to have and now Impact Alpha has all the archives of these, so you can go back and you can listen to the old ones, learn from those people too. And until next time, we'll see you all, and make sure to remember we are each other.
Thanks, everyone.
Yep.